Why does a nation with the world's second-largest natural gas reserves, a resource that could fuel immense prosperity and global influence, and fourth-largest oil reserves, a treasure trove of black gold that has historically powered economies, remain stuck in economic stagnation? What are the underlying factors preventing Iran from fully capitalizing on its natural wealth and human capital? Iran's economy in 2025 is not collapsing, not experiencing a sudden and catastrophic failure, but it's far from thriving. It's a story of missed opportunities and untapped potential, a stark contrast to what could be. Beneath Tehran's busy streets and active industries, a veneer of normalcy, millions struggle with eroding purchasing power, watching their savings dwindle and their dreams fade, and uncertain futures. The weight of economic instability hangs heavy on the shoulders of everyday Iranians. The answer lies in a web of chronic issues, a complex interplay of factors that have conspired to hold the nation back. Decades of sanctions, imposed by international powers, limiting access to global markets and financial systems, internal policy missteps, decisions made within the country that have inadvertently hindered growth and innovation, and structural inefficiencies. Deep-rooted problems within the system that stifle progress and discourage investment. These forces have created a feedback loop of stagnation, a self-perpetuating cycle that's difficult to break free from, where growth is stifled before it can begin. Promising initiatives are often cut short and potential breakthroughs are never fully realized. We'll break down the 5 key indicators behind Iran's predicament, the critical metrics that paint a clear picture of the economic challenges: sluggish GDP growth, a lack of significant expansion in the overall economy, high unemployment, a significant portion of the workforce unable to find jobs, crippling inflation, a rapid increase in the cost of goods and services, eroding the value of savings, restrictive interest rates, making it difficult for businesses to borrow money and invest, and a precarious national debt, a growing burden on the government, limiting its ability to invest in crucial sectors. Understanding how these pressures interact, how they feed off each other and exacerbate the situation, is crucial to grasping why Iran's vast potential remains unrealized. It's a story of what could be, if only these obstacles could be overcome. Iran's economic situation is complex, and its stagnation is driven by what I call the 5 horsemen of economic malaise. These are the key indicators that paint a clear picture of the challenges facing the Iranian economy. First, anemic GDP growth, rarely above 2 to 3%, which is simply not enough to sustain a healthy and thriving economy. This level of growth is far too slow for a young, growing nation with a large and ambitious population eager to contribute. Second, high unemployment, especially among youth and women, represents a significant drag on the nation's potential. This not only wastes valuable human capital but also fuels brain drain, as talented individuals seek opportunities elsewhere. Third, persistent inflation, often above 40%, is a major concern, constantly eroding purchasing power. This high inflation erodes savings and makes daily life increasingly unaffordable for ordinary Iranians. Fourth, high interest rates choke off business investment, making it difficult for companies to expand and create jobs. Simultaneously, government deficits and debt fuel more inflation, further exacerbating the economic pressures. These problems feed into each other, creating a vicious cycle that is difficult to break. The result is a low-growth, high-inflation equilibrium, a situation no country wants to find itself in. This traps the economy in a state of perpetual underperformance, hindering its potential. Breaking this cycle requires a deep understanding of how each factor reinforces the others, and implementing comprehensive reforms. Let's examine the numbers, the cold, hard facts that paint a picture of Iran's economic reality. We need to delve into the key indicators that reveal the challenges and opportunities facing the nation. Iran needs 5 to 6% annual GDP growth. This level of expansion is crucial, not just for overall prosperity, but to create a vibrant and dynamic economy that benefits all its citizens. It's the engine that drives job creation and improves living standards. This growth is essential to absorb its young workforce, the future of Iran. These are the bright minds, the innovators, and the entrepreneurs who hold the key to the nation's success. They need opportunities to thrive and contribute. But Iran has averaged just 2 to 3% GDP growth since 2020. This is significantly below what's needed and indicates a concerning slowdown in economic activity. It's a red flag that demands attention and action. This sluggish growth means not enough jobs, a critical issue that affects the lives of millions of Iranians. The lack of employment opportunities creates frustration and despair, especially among the younger generation. This is especially true for the 60% of Iranians under 30 who are entering the workforce with high expectations and aspirations. Their future depends on a robust economy that can provide them with meaningful employment. Official unemployment hovers around 10%, a figure that, while concerning, doesn't fully capture the extent of the problem. It's a snapshot that hides deeper issues within the labor market, but youth and female unemployment soar past 24%, highlighting the disproportionate challenges faced by these segments of the population. This disparity requires targeted interventions and policies to address the specific barriers they encounter, and the situation is even more dire, reaching 35% in some cities, indicating significant regional disparities in economic opportunity. This uneven distribution of jobs exacerbates social inequalities and fuels migration from rural areas to urban centers. Many graduates are underemployed, working in jobs that don't utilize their skills or education. This represents a waste of human capital and a missed opportunity for economic advancement. This situation forces many to emigrate, draining the nation's talent and further hindering economic progress. The brain drain is a serious concern, as it deprives Iran of its most valuable asset, its skilled workforce. The government's limited fiscal capacity further complicates matters, restricting its ability to address these challenges effectively. Budget constraints limit the scope of potential solutions. This means little room for job creation programs or robust social safety nets to support those struggling to find work. The lack of adequate social support leaves vulnerable populations exposed to economic hardship. Any attempt to stimulate growth through government spending or monetary policy risks worsening inflation and increasing the national debt, creating a precarious economic situation. This delicate balance requires careful consideration and strategic decision-making. Without a breakthrough in economic policy and a commitment to reform, this negative feedback loop of low growth, high unemployment, and limited opportunity will persist, trapping Iran in a cycle of economic stagnation. Breaking free requires bold action and a willingness to embrace change. Iran's oil sector, once the backbone of its economy, has been battered by sanctions and underinvestment. Crude exports fell from over 2.5 million barrels per day to under 500,000 after 2018 sanctions, slashing government revenue. Even as exports partially recover, production stagnates due to aging fields and lack of foreign technology. The massive South Pars gas field remains underdeveloped, hampered by financing and equipment shortages. Energy sector underperformance causes domestic shortages and limits petrochemical growth. Oil's decline forces the government to print money, fueling inflation and import problems. Iran's resource wealth remains untapped, a symbol of unrealized potential. Stagnation has spread beyond oil to services and agriculture. The services sector, Iran's largest employer, suffers as inflation erodes consumer spending and businesses struggle to survive. Growth is mostly in the informal economy, offering precarious jobs with little security. Agriculture faces water scarcity, climate change, and rising input costs, leading to crop failures and rural hardship. Government-set crop prices lag behind soaring costs, making farming unprofitable for many. These struggles show Iran's problems are deeply structural, not just the result of sanctions. Every sector feels the weight of an economy unable to generate sustainable growth. Iran's economic woes are interconnected, forming a self-reinforcing cycle. Slow GDP growth means not enough jobs, leading to high unemployment. High unemployment weakens consumer demand, so businesses cut back, further slowing growth. Weak growth shrinks tax revenues, but public spending needs remain high, creating budget deficits. The government borrows or prints money, fueling inflation. To fight inflation, the central bank raises interest rates, making borrowing expensive and stifling investment. This credit crunch suppresses growth, restarting the cycle. Each problem amplifies the next, locking Iran in stagnation. Breaking the cycle requires disrupting these feedback loops. Iran's economy is resilient, but resilience isn't prosperity. Without bold reforms, stagnation will persist, and the gap with regional peers will widen. The government must control inflation, reduce deficits, and end reliance on central bank financing. Easing credit, reforming labor markets, and fighting corruption are essential for growth. Diversifying exports beyond oil is critical for stability. For investors, Iran offers high risk and high potential, if real reforms materialize. The biggest risk is political resistance to change. Iran's future depends on whether its leaders choose reform or continued stagnation. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.